Welcome to In the Engine Room, the podcast powered by Capital Engine, your go-to platform for raising capital from U.S. investors.
Welcome to this episode of In the Engine Room. And we're joined here with Nicholas Crawley, who's the CEO of Imolott. Welcome, Nicholas. How are you?
Very well, thank you. Very honored to be here, and thank you for the introduction.
Excellent. So Nicholas, when I look at your background, that we are talking about real estate here and this investment opportunity on Capital Engine, your obsession, or what should I say, career journey in hospitality spans many, many years. I think it's over 47 years, starting at the Savoy Hotel Group as a management trainee. Can you tell us a little bit about your background and obviously your passion for hospitality in particular?
Yeah, so I started at quite a young age, as you said, with the Savoy Group. That in those days constituted three, probably the best hotels in London. So that was the Savoy, Claridge's and the Berkeley. They had one in Paris called the Lancaster. It was a typical management course where you learnt by working in all the different departments, from the kitchens to being a waiter in the Savoy to working in the bars. So very sort of traditional. You learnt about style, you learnt about excellence. The only thing I learned at that stage was anything about finance, but that was just the way it was. And then I got a lucky break when I was in my sort of early 20s. I got somebody to back me. So I was co-founder of a group of 3 country house hotels called Historic House Hotels, buying them at a time when you could still buy large unused hotels, or actually in some cases just houses in the countryside for not a lot of money, all listed buildings. It's not the case anymore. These sort of places now go for a huge amount of money. And we converted in the sort of mid to late 80s, the 3 houses, one in Wales, one in Yorkshire, one just outside London. And they were all very successful. I think the Welsh Hotel was generally considered to be the best hotel in Wales. All 3 hotels ended up in the Relais Chateau Marketing Consortium, if you know that. We won many conservation prizes for converting the buildings, Prince of Wales Award for conservation. We got the Queen's Award for export in the late 1980s because of the large number of American visitors that we had to the hotels. I remember getting one of the hotels on the front cover of Gourmet, which has a huge circulation in the States, and that kind of put us on the map. And probably about half our business at the time was from American clients. So I did that for sort of until the sort of early 1990s. Then I ended up running a group of 12 restaurants in London, which we put together with some partners, including some prestigious names such as L'Étoile, another one called the Gay Hussar, one of the oldest restaurants in London. And that was a different experience altogether. Restaurants are not such easy things in their way to operate as hotels are. Margins are much, much slimmer. But I mean, you get it right, you can make good money. Get it wrong, you can lose money very quickly. And then in the sort of mid-1990s, I came on board a public company called Regal, that was quite a small group, which with a partner who was a financier, we built up over 10 years into a fairly substantial hotel group. It was 120 hotels in the end. At its peak, it was turning over about 115 million, making about 23 million of pre-tax profits. Very much in the middle market. So we bought a huge number of hotels off Forte, as it then was. They were divesting themselves of some of their particularly coaching inns. So there are quite a number of listed buildings there, which is a theme through my sort of career. I like hotels with character. I like hotels that have a listing attached to them. That company was a PLC with all that goes with running that. And eventually we took in we had a Malaysian buyer that came in as a substantial shareholder and ended up taking over the company. And I stayed with them for a while and eventually left. And then after that, sat on the board of a number of fairly diverse companies. One, the Scotsman Hotel Group, had a hotel, 5-star hotel in Paris. So that was a new one for me, operating something overseas. We converted the old Scotsman newspaper headquarters building in Edinburgh into a 4-star hotel. Another one called Four Pillars, that was 6 hotels. We eventually sold to De Vere. Perhaps the most enjoyable of all was one called the Ile de France in St. Bart's in the Caribbean, which I was chairman of for 10 years. That was named by Condé Nast as the best hotel in the Caribbean, and consistently was considered to be one of the best hotels in the world. That was eventually sold in 2013 to LVMH. It's now called the Cheval Blanc, and is still a very top hotel. And at the time, that hotel was sold for what was then, I think, a world record price per room. And we tend to measure things in the hotel business in terms of room rate, but the average room rate on that hotel was over €1,000 a night. Probably a lot more now, I have to say. So that sort of took me up to a point at which I joined a group called St. James's Hotels, which was a group bought by an American, or actually an English entrepreneur, but he lived in the States. That was a group of 15 hotels. My brief there was to sell most of them and to retain a couple, which I did fairly successfully. The two that they retained, we converted into a brand called Indigo, which is part of, which is an IHG brand, largest hotel group in the world. And that was fun. Again, listed buildings. One was in Bath, one was in Stratford. Acquired a hotel in Bath as part of this group, and eventually ended up buying the whole terrace. It was a terrace of grade 1 listed buildings, which we turned into a 167-bedroomed Indigo hotel. The one in Stratford, not quite so large, was again a listed building, which I actually run in a previous existence at Regal. And I did that up until sort of COVID times. And I ended up buying one of the hotels that they wanted to sell myself, which was the Norfolk Arms, which I've been very fond of. It's a 39-bedroomed hotel. It's owned by my pension fund, and it's operated by Imolott, which is essentially a management company which has a lease from my pension fund to operate the hotel. And it's that company we were going to talk about today.
Excellent. And I believe Imolott, the origin of the name has some personal significance, which is always the one thing I always ask entrepreneurs and founders.
Yeah, it's a mixture of my two daughters' names, Imogen and Charlotte. Hence the name, no more than that.
Excellent. And it's clear the wealth of experience you've got in this hotel world. Can you talk about the team involved in this particular project? You know, it's the Norfolk Arms Hotel in Arundel, which is in the West Sussex.
Sussex, yes. So I mean, we employ about 50 staff altogether. I have a good manager there who's sort of old school, and it's never easy getting staff, particularly in these times. But on the whole, we have a good team there, obviously attached very much to the hotel. Then within the wider world, I have a partner, Simon Porter, who's worked with me for years in a variety of the hotels groups I've been talking about. He has a background in particularly in sort of real estate, so property purchases, acquisitions, sales, and he worked for a restaurant group that again I bought within Regal, the public company. So he has a particular expertise in the sort of food and beverage side of the business. He puts together the sort of plans. So we look if we're buying at anything in enormous detail. And because we both have a wealth of experience, we know exactly what we're looking for. And then I have many contacts within this industry, but my overall desire, I think, these days is to not have a head office. It would be the two of us. I like outsourcing things. I had a huge head office when I ran Regal, and I'm not sure it's necessary, but there's so many things you can outsource to. So I outsourced the accounts to a firm who are hotel specialists. It's much easier than employing accountants within the business. I have an HR person that, again, I worked with. She was a hotel manager in a previous existence, and it specializes in HR. So again, that's outsourced. I outsource IT. I think probably marketing, perhaps more a bit in-house. One would try and keep it as lean as possible.
So that's a unique operating model where you source all the core items based on your experience. But talking about this opportunity, so and just in general, when it comes to hotel investing compared to other real estate investing, what are some of the key factors, when you look at the investment?
I mean, if you compare it, I don't have a lot of experience of other commercial business or sort of retail or anything, but I think certainly hotels can generate very good results, possibly more so than you might get in sort of standard investments. Hotels generate their income through occupancy and room rates. Real estate generates income through rental payments. It's much easier taking money off a tenant than it is generating it yourself. But I think the rewards are there if you get it right. So owning real estate, I think, is much less complex than managing a hotel. Within a hotel, you have staffing, you have marketing, you have customer service. It's a constant attention to detail. You have, I suppose, as with real estate, you're subject to fluctuations in tourism and travel. Both are subject to economic recessions, and there's no getting away from that. I think my ideal hotel would have both a commercial and a leisure part to it, because if you have a hotel that's purely corporate, what do you do at the weekends? It's difficult. You can do, a lot of them do weddings, but very often it's very quiet. Whereas if you have a hotel that's entirely reliant on leisure business, Thursdays, Fridays, Saturdays and Sundays can be very busy, and the beginning part of the week can be less so. An ideal hotel, and we have this in Arundel to some extent, is a mixture of the two. I ran a hotel in Windsor once, which was to me a sort of perfect mixture, because there was plenty of good corporate business around, and there's certainly an awful lot of tourist business in Windsor. So that sort of combination is good. Hotels require larger initial outlay, so furnishings, marketing, branding costs, whatever you have to put in, are more expensive than perhaps more sort of real estate sides of things. But I think the returns in hotels can be high. I typically sort of try and target something that you can get up to a sort of 12, 13, 14% yield in time. And as I said earlier, the risk can be a bit higher, but the capital growth can be there as well. So if you can get the EBITDA up, hotels sell off a percentage of their EBITDA. So you get the yield up, and the underlying asset comes up as well. Yeah.
And I see just a little bit about the hotel. It's a historic Georgian coaching inn. Is that correct? Built over 200 years ago by the 10th Duke of Norfolk. Is that correct?
That is correct. Yeah, so it was built in the 1780s. One forgets that actually, I'm not sure the term hotel necessarily existed then, but certainly inns did, and coaching inns. Everybody got around on horses, so typically a hotel as this one would have an archway where the carriage came in with the horses, and at the back would be the stables. The stables at this particular hotel were demolished in the 90s, and we now have an annex with rooms in it where the stables would have been. But the rest of the hotel is essentially the same as it would have been in the sort of 1780s, and there's quite an interesting history attached to it. So you find that Queen Victoria came to stay and was requisitioned at various points by armies during the two wars, and it had its ups and downs as a sort of hotel business, but hopefully in peak form at the moment.
It's brilliant, and it's also quite centrally located under the battlements of the Arundel Castle, so it's a perfect place to explore the local area.
Yeah. There's plenty to see and do in the area, and we try and major in on local produce, and we have a tap bar, as we call it, attached to the hotel, where we serve Sussex ales, and we've got a wide range of Sussex gins. We've even got a Sussex whiskey, got a Sussex vodka. So we like local, and that's very much my sort of theme moving forward. I've run branded hotels, I've run Hiltons, I've run IHG hotels, and there's a lot to be said for them. Certainly from an investment point of view, brands give comfort to investors, but at the same time they are very, whereas we're looking at acquiring more sort of boutique hotels. They're not big enough, frankly, to be branded. Individuality is everything. The rooms are different. Our rooms in the Norfolk Arms are all actually very different. They're quirky, they have antiques in them, there's a lot of history. So in listed buildings, this is what I feel perhaps most comforted by. One may very well be part of a marketing consortium, so that's something like Small Luxury Hotels of the World. So the way forward is often to join a marketing consortium, but I don't ultimately want a sort of cookie cutter method. This is about the personal touch. I worked over the years with a lot of different interior designers, so again I have a lot of people I know I could call on. So if we were converting something that we purchase in the future, I'm very familiar with the whole building side of things and getting best value for money out of small teams and again, local teams, people.
That's brilliant. And then just talking about the returns, what are typical returns for an investor in this opportunity, which we're listing on Capital Engine? Can you just talk a little bit about that?
Yeah, I mean, we're offering an 8% return over 3 years and then a 9% return if people stay in for another 2 years, sort of 5 years in all. But I think in the examples, if one looks at in the information memorandum, which is on the Capital Engine website, we're looking at, if we combine it with the profits we make from Imolott, a fairly sort of substantial profit that would cover about 50 to 60% of those costs, so that there's obviously a reasonable profit coming into the directors as well as to the shareholders.
And just talking about sort of the next 3 years, you've obviously got this property in the portfolio. What are some of your plans for the next 3 years?
So there's two that are listed in the information memorandum, just perhaps more as examples. I mean, they're both interesting. One is located in the West Country in Somerset, and it's a big wedding venue. It's a 13-acre site. It's for sale for 3 million. There are 21 rooms. You could build some more, but the business is a combination of accommodation business, restaurant business, cafe, conferences, and above all weddings. And I think there's development potential there. The other is in Cornwall. It's not a large hotel. It's on the coast. It overlooks the sea. It's a big food and beverage business, but one could add another 10 rooms there. But it's very profitable. It's been consistently making about £500,000 profit a year since COVID. And I think by adding extra rooms, one could get that profit up probably to about 600,000 a year. But I've got others. I'm looking at something at the moment up in Yorkshire. It's run by a builder, made a lot of money in something else, but he's not a hotelier. And I think, as if there's a way of going forward, it's very much to try and find hotels that are either poorly run, especially by non-hoteliers, or look at something that's perhaps well run, where it's possible to upgrade. So adding on rooms is always a very profitable way of moving forward, or upgrading a hotel, say, from a 3-star to a 4-star standard. That can also be very profitable. The name of the game is very much one that's built about average room rate. So you make your money more easily out of the rooms than you do out of the food and beverage. And it's not to say you don't make money out of conferences and weddings and things like that, but food and beverage is hard work, and it's often something you have to have in a hotel, but the margins can be quite low. So the profit is made out of the rooms. So if you could take let's say you take an average room rate from £80 to £120, most of that would probably go through to the bottom line. So I would look at things that perhaps could be upgraded in order to increase the EBITDA. But it's very much a market where things come and go quite quickly. So once we've raised the funds, I will look for best value at that time. We're always looking at things that are for sale. Generally, if something good, you had to be able to move quite quickly, which obviously with funds in the bank we would be able to do. In my experience, few things don't come to the market. It's quite tricky trying to buy things off market because people want to get best value. You often have to sign NDAs, so things are not openly on the market, but it's not easy finding things that are totally off the market.
When you look at a potential site, what are your key things that you look at? Obviously, location is probably key, as well as possibly something to do with that unique site.
Yeah, looking at what's the competition, how's it doing, is it going to sustain this, are other hotels going to be built in the area, is the market one that's going to have longevity to it. There are parts of the country for these purposes where I wouldn't go. London is a complete no-no because the prices are so fantastically expensive and the yields are tiny. Not particularly interested in large cities because there's huge amounts of competition in the sort of Manchesters, Birminghams of this world. I'm not particularly interested in the immediate environs of London because you have to pay quite a bit more for the assets. So we're looking for value for money. It would tend to be places like the north of England, Scotland, the south and southwest I'm particularly keen on because the tourist markets have been very buoyant there and you get more bang for your buck. It's better value. and in order to give an 8% yield, we've got to target hotels where we feel comfortable, where we're making sort of 12, 13, 14% yield ultimately. So I think that's probably it.
And just a profile of your existing customers. Is it what geographies are they coming from, and is that changing, or how's it looking?
Well, certainly at the moment in Arundel, it's more retired people. It's not just because of the nature, I think, of the town, and there's a lot to see and do there. We're not particularly geared up for families or children. It just happens to be that market, but it could change. We might find something in the West Country which is particularly dependent on, say, the family market. I'm not particularly setting my ways on it. Obviously, we're talking about the sort of 4-star boutique sector ultimately. So, we're not talking about 5-star hotels. They're difficult. They can be very profitable, but we're talking about sort of 4-star market here. So it's sort of, mid-market, people with money, retired people with disposable income. It's interesting just looking at, I was looking actually a bit earlier at Savills sort of predictions for the market this year and also looking into next year. The market has shown annual growth, they reckon, that this year of about %. So occupancy is now back to where it was 19 before all the COVID years sort of struck, which had a terrible effect, obviously, on the hotel industry as it did on many other businesses. But RevPAR in the economy market has gone backwards by about 6%. Whereas in the upscale market that we're talking about here, it's grown by about 3%. In the luxury market, it's grown by about 4%. And certainly at the sort of more upscale side of the market, things are looking fairly positive for next year. I think there's a lot of, in the economy markets, it's been particularly badly hit by the fact that a lot of asylum takers, people have been put into these hotels. So that's probably accounts for the fact that that's been going backwards as the government has stopped doing that to the same extent. But that sort of economy market is not really, for me, it's not what we're looking at here.
And the minimum investment is $10,000.
$10,000, £10,000,
yeah.
€10,000.
And exactly, while I'm looking here on the Capital Engine page. And in closing, and Brian, if you want to come in after me for any questions, how can Capital Engine support you to achieve your milestones? And is there anything else we can do to help you?
I think just helping to raise money, getting the word out there. It's very much something I'm very knowledgeable about. I'm comfortable in this, been at it a long time. And I'm confident that we can find hotels. If we could try and find 2 or 3 hotels to buy over the next sort of year or so, added to the one I'm already operating. It doesn't provide a huge challenge for me. I've run very big groups of hotels, but I like the hands-on side of things at this sort of stage.
Yeah, thanks, Wolf. Maybe just 1 or 2 questions from my side. Nicholas, here, just in terms of it is a loan note, so maybe you can just touch on how that things around the loan or the note itself. In other words, the capital stack and what is the security around the loan notes in terms of possible default or the likes.
Charge over the asset effectively, so there would be a debenture which has a charge over the asset. I'm not proposing at this stage to borrow any money, so there wouldn't be any bank debt in there. There would just be this charge. So I think it's fair to say it's probably as secure as it can be. It's very, very simple, really.
Okay. And last from my side, just wanted to really ask you, since COVID, and what the impact of COVID has kind of been, and if that's affected or is currently affecting, and things like Airbnb. It's interesting. I was reading up on that. Airbnb, without owning any real estate or assets, and I think was valued at a higher valuation at some of the likes of some of the bigger hotel groups, which is really interesting. How has Airbnb kind of impacted the hotel industry?
I haven't personally felt it. Others may have done, but looking at the way occupancies and average room rates have risen since COVID, they're back to the sort of levels one was seeing in sort of 2018, 2019. So there's obviously room for both in the marketplace. And again, I think the sort of places I'm looking in, more in the countryside, there's probably far less competition anyway with Airbnb than there might be if you were in the centre of Manchester, say. So I don't particularly feel it has an effect. And I mean, the COVID years were definitely tough, but I mean, they were tough for everybody, and the business simply dried up. Most hotels got through it with a lot of government support, and we're back to normal now. I hope it never happens again.
Excellent. Yeah, well, that's all from our side. Well, I'd like to thank you for being on the podcast.
Not at all. Thank you very much for inviting me on.
Yeah, and I must say, with all the talk of the hotel, I was envisaging myself in the tap room, in the Norfolk tap, having a Norfolk ale. But thank you, Nicholas, for sharing with us. We appreciate it, and I look forward to supporting you on this journey.
Thank you very much indeed.
Excellent. Thanks very much.
Thanks, guys.
We've helped innovative companies and entrepreneurs raise over $500 million using our technology, and we provide all the tools, reporting, analytics, compliance, to manage large U.S. and international investor communities.